Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Wednesday, December 28th. Stock futures are pointing to a modestly higher open on Wall Street today. Trading volume is expected to be extremely light again today, and there's no economic data on the calendar this morning. So U.S. investors are once again taking their cues from Europe. The big news out of the Eurozone this morning was a successful bond auction in Italy. The Treasury there sold 9 billion euros of 6-month bills, at half the interest rates produced by a similar auction last month. The yield on Italy's benchmark 10-year note declined following the sale and is now back around 6.8%. For much of the past few months, it has been trading above 7%, a level that most experts view as unsustainable.
Following the auction, the euro is holding steady, trading well below 131 against the dollar, and the yield on the 10-year U.S. Treasury note is dipping a bit to 2% even. Gold continues to lose ground this morning, now dropping to around $1,590 an ounce. And crude oil is pulling back a bit, although it's still close to $101 a barrel. Oil prices have advanced for 6 straight sessions, punctuated by a 1.7% gain yesterday. Investors have been buying on reports that Iran has threatened to cut off shipments through the Strait of Hormuz, a key shipping route for oil tankers. Those threats come in response to new sanctions being levied against Iran. Later this morning, the American Petroleum Institute will release its weekly data on fuel inventories, followed by a similar report from the Energy Information Administration on Thursday.
Aside from that inventory data, this morning's economic calendar is relatively empty. But tomorrow brings reports on the labor market, manufacturing, and real estate. We'll see whether initial jobless claims continued to decline last week, after the previous reading showed the fewest applicants since April. At 9:45 a.m. Eastern Time, the Institute for Supply Management will release its reading of manufacturing in the Chicago area. And finally, we'll get a look at pending home sales for November from the National Association of Realtors. It's expected to show a small improvement following a huge jump in October. Yesterday, U.S. stocks were underpinned by a strong reading of consumer confidence. It rose nearly 10 points from November's level, a much bigger gain than expected.
On the corporate front, we're keeping an eye on shares of Medicis. The drug maker boosted its 2011 profit forecast, but lowered its revenue outlook due to renegotiated contracts. Medicis is set to open about 4% lower. We're also likely to see big losses in shares of the semiconductor firm Cavium. They're down nearly 8% after the company cut its fourth quarter sales forecast. But one stock winner in the pre-market is Fidelity National, up nearly 2%. It's selling an 85% interest in its personal lines insurance business to WT Holdings for about $119 million. That's the latest from Weiss Research. We'll be back after the opening bell with all the market-moving news.